Hey everybody, welcome back to another video. In this video, I am going to go over my trades for the day. I took too many, I overtraded, and that is because I realized that in bringing my risk down to only 50 per trade, my brain, I'm not allowed to violate that rule. I'm only trading $50 risk per trade until I can be consistent. I would need to focus on risk management. But my brain, it still wants to seek stimulation. So to compensate for trading less size, I'm trading more, and I can't do that. I have to trade the same I traded when I was still risking too much, when I was actually had my periods of profitability, and yeah, I just need to be better at that. So let me share my data chart. This is how many trades I've taken since my last video. 1, 2, 3, 4, 5, 6, 7, 8, 9. 9 trades is way too many to take. 3 of them after hours, where I lost $38, where I lost 0.77 R. And then today, I made $57 and made 1.14 R. So in total, I made 0.38 R and I made $18.75, but I think I'm actually down when I look at where I closed, where I ended yesterday at $701. I'm down quite a bit in fees because my account's now at 680. So even though I've probably spent about, according to this math, way too much on fees. Like almost $38 on fees, which is just tremendous in a very bad way. Tremendous in a tremendously poor amount of fees. And less is more. I need to trade less, obviously. I know that. So I just need to focus on taking those very high quality setups at key levels when it's not ranging, etc. So how can I do that? Only trade when I think I can, just when the probabilities are good. I took this first trade off the open with like the last bar of yesterday acting as my stop loss. It came up against me and it paused. And hey, that's another good entry bar, and that's another good entry bar. So I had my confirmation, a good confirmation bar. This just missed my take profit. It actually went up and almost stopped me out, but it didn't go above here. It was a point away from stopping me out, but it went all the way up and then came back down, and I won my trade. So I made $120 or 2R plus on that trade. So that was a great trade. But guess what? The market was shifting. And here's my plan to take better trades, by the way, to be more selective, is I need to incorporate the hourly chart into my trading better. Okay? I need to trade the hourly chart and use the 5-minute chart as places to enter. Right. So looking at the hourly chart, it's like after this bar, the odds are this is a doji bar, an indecision bar. I'll make it really big so you can see on YouTube. This is a doji bar, an indecision bar. Not until we break out, and it has wide wicks. So the odds are it's probably not going to go anywhere. Another doji bar. So after 2 of these bars in a row, that's like consolidation. That means, hey, we're probably going to go somewhere. And we go up a little bit, but it still kind of moves around a lot. And we go up. And then we go down. And it's like we just have to kind of pay attention to these bars and just think logically, like, where is the good time to get in? Okay? So this was a day of trading right here. A bullish day of trading. It moved up and then it ranged the rest of the day. In the first hour and a half, that is when we had our big move. Then not much happened the rest of the day. Yesterday, Okay, we get our candle up in the first 30 minutes. That signifies, hey, it's probably going to be bullish. Okay, the first candle can be pretty indicative of what the rest of the day is going to do, and we already have bullish momentum. It makes sense we're probably going to go up after this. We push up 34 to 54, 20-point move, and it was kind of a slower grind up, but we have to be patient. We have to wait better. Okay, hammer up bar, but big wick. Okay, that means that there's probably a balance of buyers and sellers in here. It means there's more buyers, but it means there was some sellers to try and push it down. It means it's not going to be that good on the next bar. Probably. All right, second consolidation bar. This means it's probably going to go somewhere from here. If I had to guess, based on most of the wicks being underneath, based on that we're in an uptrend, I'm guessing it's going to be a bullish bar. And it was slightly, and from the close of this bar, it rose about 15 points. So if we can hold for an hour and just capture these 15-point moves that each hour bar makes, or if we can just capture that move for the end of, like, that's what we want to focus on, all right? That's what I need to focus on, not we. That's what I need to focus on for my plan. And at this point, after this bar, it's like, okay, we're ranging. I don't want to do bar by bar analysis, though. That's kind of pointless for this video. I'm just kind of explaining my thought process that I need to be more selective and focus on this chart more. Okay? We started the day with a hammer up bar. The market has been bullish. It makes sense that after this bar, we're going to move up. We moved from 50 to 70. It's a powerful 20-point move. You could have targeted the high of the prior day, knowing that, hey, it's probably going to be retested, and that would have worked out well for you. I got short here because I thought we were still technically bearish on the hourly, and I captured a pretty nice short in the first hour. That short thesis was good then. But after we push up like this, on the 5-minute, we can see all these wicks underneath. We know, okay, there's a lot of buyers here. It's probably bullish. But we can't get long until the EMAs switch over. Still can't get long. I got short here. And it wasn't a great short. It wasn't a horrible short, though, because look at it. It's still bearish. It was still bearish on the it was still bearish on the 5-minute and the hourly, and I thought this is just a pullback to the long side, and now the bears are gonna make another move, and we'll at least retest these lows. So I think it was an okay short. In hindsight, I can say, oh, it wasn't that great, but in live time, this seemed like a good short. I think that was an okay short. After, though, these 3 bars of consolidation, we can do a time stop, and we can say, okay, it's not going anywhere. The best trades go in our favor right away. We could have got out for about break even, or even switched long. Hey, switching long would have worked there. But then I would come back and stop us out. This was a dumb short. I won it, but then I realized it was a dumb short, so I got out right after. All right, this bar is a great long bar because we've shown momentum. We've had our sideways move. It's consolidated. The EMAs have switched over. Now it's like we should get long here, and we should just target the next key level up above. That would be the high of the prior day, or like the middle of this range here. So we should at least target like 62, which would be a 12-point or a 13-point move up from this candle. Push up, push up, push up, looking really good here. Push up. Even this candle, if I see this candle, I'm thinking, okay, this is another signal candle, and we've already made more than half the move. I could think about targeting a little bit higher, and if my take profit hasn't been hit, I could look to get, if my take profit has been hit, I could look to get back in for another move. Or if my take profit hasn't been hit, I could say, okay, I think based on this really bullish action, based on this hourly chart, we're coming off 2 hammers up. I think we could go a little bit higher, and we could definitely target the high of day, or like slightly beyond, like maybe this first pivot here, and it would hit in like 1 to 3 bars after. Now there's a bias. I don't know the name of the bias, the technical name, but I listened to Brett Donnelly talk about it, and it's like traders have a tendency to move their take profit once it looks good, instead of just keeping it the original take profit that they had when they were unbiased, when they were flat. So you don't want to change your take profit too much, but in this situation, I think it's worth the risk to maybe go for 1 bar, as big as this bar is, maybe extend it beyond. So this bar is, 7 points. Go 7 points beyond 67 up to 65 or 75 or 74, and I think it's a reasonable to target that. But after it's made this move, we've had 1, 2, 3, 4, 5, 6, 7, 8, 9 bullish bars in a row. The move is over. Like, it's made its measured move. We can expect some consolidation. It's exactly what happened. But after a period of consolidation, we can expect it to get bullish again, make another measured move potentially. So I don't think it would be that poor of an idea to get long in here, other than, look, this is chop. This is barbed wire chop. There's wicks on both sides. This is not a good place to enter. How do we know when it's actually a good time to enter? I would say it's pretty hard too. Okay, it's both an art and a science. But if we have to wait for it to break outside the range and see how it reacts. Okay? So like, let's say it broke up and it held strong to the top side. I wouldn't buy that, but I would wait for a pullback. Okay, yeah, like right here is a great example. Breaks up, hammer up, so it's not looking too strong. But like, after it breaks a range, we want to see it consolidate at the edge of the range before getting long for the next move up. So it breaks up, it consolidates. Could get long off the top of this bar, but I would want to see it consolidate a little bit more. Maybe after this bar 54, because it like breaks to the top of the range, pulls back a little bit. Yeah, then we get another move up. And I wouldn't be targeting a huge move here, mainly because it's already put in a pretty good sized move today. It's already put in a pretty good sized move from all the way down here from 47 up here to 77. That's 30 points, but the range of the day, went all the way down to 32. So it's a 52 point range, and that's pretty standard for S&P, for ES futures. And it typically, that's about an average day. We can tell what an average ATR that we shoot for by switching to the ATR 20, seeing what an average day is. Okay, lately the market's been more volatile. 70 points is an average day. Okay, so if we go to the ATR 1, we see we're at 52. That's 18 points away from 70. So this kind of means that, hey, this probably might make another measured move. In fact, I am going to get long here. This is a great opportunity to take you through my new trade process. Because, okay, so I'm risking 3.5 points. So I enter the date. The trade setup is 5 minute with EMAs. Are there any doubts? And I should only answer no. I can't ever truly there will always be some doubts because I don't trust myself and I want to assume each trade I enter is wrong. And I have some doubts, like, hey, it's already moved pretty far today, but there's still 18 points left on the ATR. I think it's a good, okay probability trade, so I'm going to enter. I enter the index, 5 points for that. My risk is 50. So the stop loss distance is 3.5 points. This will tell me how many contracts I need to trade. So I 2.85. That's pretty close to 3, so I'll round up and I'll join a little bit more with 3 contracts. But since I'm entering pretty close to the bottom and my risk is only 1 point now, I can enter with 1 more. So now I'm risking about $50 on this trade, okay? Risking about $50 on this trade. I'm just going to target slightly above this recent high. Go for 5 points. So that will be my trade. And if this fails, guys, I don't care because it's a good trade. It's within my plan. It is a close risk and close take profit. I'm going for 5 points, and that's cool. Okay, but I started this video trying to answer a question. How do I trade less? And I talked about focusing on the hourly. And what is the hourly saying here? We have our 2 consolidation bars. We have kind of a hammer up. It makes sense that this market would push up a little bit. I think it makes sense that it consolidates. We're going to push up a little bit. If I'm wrong, maybe I'm wrong and the market's just going to range a bit, and in which case that's fine. Okay, I'm assuming that this trade is going to fail, and I'm okay taking the risk to lose $50. Back to here, I'm trading with 4 contracts, but the average risk now is only 2.5 points. So yeah, it's saying I should trade for 4 contracts. Average risk actually is 2.38. Or, oops. Yeah, 2.38 now. So 4 contracts is appropriate. And this equation is just my risk divided by the stop loss distance. The risk divided by the stop loss distance multiplied by the value per point of the index I'm trading. And then this R will auto-populate. I have 2 risk to reward variables. It'll auto-populate once I enter my P&L. Say this trade hits, and say I make $100. It would be about 2R. 2R exactly, because I'm risking 50, or I'm risking about 50 per bet, so it'd be $100. Okay, so back to the main question. How do I trade less? It's going to stop me out. It's okay if it does. I'll be a little bummed out because I want to get a win, of course, but it'll be okay. I just need to be more selective. I want to focus on taking the higher quality setups that are aligned with the hourly. All right, we lost. That's fine. So let's take a look at the P&L statement. How much did this trade lose for us? Then I promise I'm going to get back to the question of how do I trade less. So 1750, 1250, 8.75, 8.75. Okay. So minus 1750, minus 1250, minus 8.75, minus 8.75. We lost $47. We lost 0.95 R. Whatever. That's fine. That was a okay loss. That was an okay loss. I'm comfortable taking that. Whatever. Well, we have to be selective, okay? Where's my trading plan? Got my trading plan right here. We want to focus on the hourly. We want to focus on the 5-minute EMAs. Okay, we only want to go long when the 9 is above the 21. We want to focus on flag patterns and ABCs. Okay, so this is like a flag pattern or an ABC. What do I mean when I say ABC or a flag? Well, just very simply A, B, C. A, B, C. You can kind of see it everywhere in the market. A, B, C. You could argue A, B, C, but it's just like a move in the direction, a counter move, a counter trend move, like a pullback, or just a sideways move, like some consolidation, like right here. And then we want to focus on entering at the end of that and capturing the C. And if you get stopped out like I did here, basically down to the tick, if this hammer bar closes like it is, I'm comfortable retaking this trade because I think this long setup is still in play. I just need to be selective, okay? I shouldn't go against the hourly trend as much as I have. I need to be just more logical and analyze. I need to think without confirmation bias. I need to think about the other side of my trade. Like if say I'm bullish, I have to think like a bear. Like I have to get in the headspace of a bear and pretend I'm bearish and say, okay, I'm bearish. Why is this a good bearish trade? And then that will counteract. I shouldn't do dumb off-process trades either, like these two trades. Okay? I've heard from Al Brooks and Adam Grimes, there's no bad entries in like a trending market, like one that's moving with all the participants on the side that you are on. I thought at this point that we were very bearish, which I shouldn't have been because we were switching bullish on the hourly, and this is like honestly pretty rangy. Like there's lots of wicks underneath. It's just not a very bearish market. Even though the EMAs are looking kind of bearish, I thought we were consolidating and we were going to make a big plunge drop off. I thought after two pretty bullish days that, just with the way the market's been having these big drop offs, I thought we were preparing for another one. Just because the market has been, kind of up and down lately. What else? What else? What else do I want to say? It comes down to I'm risking less this time. I'm risking much less, so I have good risk management, but I need to be selective with my trades and enter on the best trades. Enter when the market participants are favoring a side and be more confident in it and let it ride too. That's another big thing, is letting it ride. Pretty choppy today. I know I don't want to trade at chop, and frankly I'm not that good at not trading in chop. Okay, this trade is over, so we're gonna go ahead and put in more orders to try and get in long, and we'll put in four trades or 4 entry orders because that would equal $50. And I'm just going to put the stop loss for these at the bottom of the signal bar. Or I'll put it right underneath the signal bar. And the entry, I'll put 1 wick above the signal bar. 1 tick above, not 1 wick above. So 1 tick above and 1 tick below is what we'll do. And for the take profit, we'll just target right above, just like last time. So we'll target 5 points. If this hits, that'll be $100. And hey, that'll be great. And I'm risking, am I just risking 3.5? 2.5, or 2.5, okay. So, yeah, I don't know if this is going to enter, but this is a good setup, and I'm trying. It's okay to get stopped out a couple times trying for a setup. It's fine to do that. It's normal. And yeah. Okay, so I need to be more selective. I know that's kind of ironic that I'm trying to enter this trade. I could see a viewer saying, well, you're not being selective right now, but this is, I think, a good trade. And just, you got to zoom out and look at the big picture. All right, we're trending up. These EMAs are moving up. It looks like we're just having a little pullback right here, and that's pretty natural. Okay, but I think this bullish momentum is going to continue on the day. And, that's just what I think is likely. All right, the pullback is still happening. That's fine. That's cool. So we'll get rid of these entry bars, and we'll just try again later. The best opportunities come in the morning. That's when it makes the biggest move, typically. If you look at the first or second bar of every day, big move up, big move up. These first 2 hours, big move up. Most of the time, the big move happens, big move down, big move up, big move up. Most of the time, the biggest move happens in the first 30 to 60 minutes. But we really want to focus on trading the hourly. And I'm even going to encourage myself to trade based off the hourly. Like right here on 127, bullish push up. We're outside the prior day range. We're way down. It makes sense that we would try and close this gap. Big move up, pull back, pull back, pull back. Doji bar, inside bar. After the close of this bar, to put the stop loss underneath the last 2 hour low, it's a 10-point stop loss, approximately. And if you just target the high of that bar, 17 points, up to 43 points. That's 25 points. So you could risk 10, get 25. You would just have to not interfere and leave it alone for 2 hours. And I really need to become a better swing trader and hold for longer. My average hold time is abysmally low, and I'm going to try and get better by focusing on the 1 hour. And if I see lots of wicks on the 1 hour, I'm going to know that it's probably a choppy time, and I should probably wait a bit because, it's not a nice tight consolidation. The market contracts and expands. It cycles through through contractions and expansions. And I want to focus on getting the expansions at the end of the contractions. And if it's just wild and wicky like this, it's not going to happen. And look, there are times when the market's very clean and moving well, and there are times when it's really bad and you should be risk off. Okay, so I know I kind of said a lot in this video, but the main thing is just focusing on the move at the start of the day. Don't get too distracted messing with moves later in the day. Oh, the ATR is very low right now. It's at 2.8. So I shouldn't even be trading the 5-minute chart. I should be looking at the 15-minute chart for my 15-minute setups. Okay. And the 15-minute setup, it's a newer setup of mine, but a focus is on trading with the hourly trend and finding areas where all the wicks kind of touch the same area, entering around that area with very low risk, and just going for like 1 to 2R. So how it would work here, I see we have 2 bars right here where the wicks end about the same time. I'll put in an entry order with the stop loss below, and I'll target 1 to 2R above. So here would have got filled around here. Stop loss below wouldn't have got hit, and eventually would have made its way up and hit about 1 to 2R. Could do the same thing here with a stop loss below this low. 69. Stop loss is only 1.25 points away. Would have came up and hit above. Okay, this time it would have got stopped out. You would have put the entry maybe here with the stop loss below here, or you could have put the entry here with the stop loss below here, and you would have got stopped out. But then after this candle close, all these wicks below, a failure to break out below, a touch of the 9 moving average, because the 9 moving average on the 15-minute chart basically acts like the 21 moving average on the 5-minute chart. A test of that and failure, that means we're pretty likely to be bullish. I would probably put my entry around here, risk about 3 points, but target the higher, and boom, it would hit, or even target the high. But we want to use the 15-minute around in times when the market is slower, and when we see these like bases form. And when I say base, I just mean area that a wicks react to and respond. And look at it focused. We pushed up to the high of the prior day. We consolidated there, and now we're making another move up. So yeah, the ATR has fallen on a cliff. I don't want to trade in low ATR environments. That's not a good thing to do. Pretty much like 6 and above is a good rule of thumb. So like all in here, that's another reason that, hey, you just shouldn't trade this. It's just not, at least on the 5-minute, the ATR is just too low. We want to trade when there's higher liquidity, when there's follow through happening. So even though I just got long here and lost $50, and I'm tempted to get long here again, I'm not going to get long here because the liquidity is just too low. But if it is a good setup on the 15-minute, which there isn't because we're still descending, we've made 3 lower lows. We want to see like them pretty much all close around the same level and not get lower. Like this is a good time to just sit out and do nothing. And so that was a mistake. My last trade was a mistake. I'm admitting it. I didn't pay attention to the ATR. I missed this indicator down here. In fact, I probably should make that indicator. I'm going to make that indicator more visible. I'm going to make it the color red, and I'll make the band thicker. Maybe not that thick. I don't know. Maybe not red, but yeah, I'll make this more obvious to me so it just pops out. I don't want to do like too aggressive of a color, So I'll just do yellow. I like yellow for that ATR. And hey, look, it's going up. So if I would have tried my 5-minute trade that failed, it would have worked here. All right, or seemingly. It would have to go up to like 81, 82. So It would have gotten about halfway there. But it's, I don't know, it's kind of rangy and the ATR is low, so I don't love it. So now I have to change this AT. I'm not going to do it on camera, but I'm going to have to go through and, change this on all of them to, 5-minute, 15-minute with pre-market. I have to update all of these. I guess I only have to update it on 3, so I'll just do it now. But look, I know this video was kind of long, and I probably lost a lot of you. So if you made it here, thank you for, just watching, and I appreciate it. I think paying attention to the ATR is going to help a lot, and as well on the daily. That's going to be important too, to just pay attention to what this is. And now it's really going to pop out, so it's like, it's going to grab my attention. It's not like I can ignore it now. I'll be more cognizant of it. So this is kind of like a psychology hack, just to make it more visible. Okay, so that's a good thing, and I'm happy about this. And yeah, it's kind of ugly, but whatever. We can make it go take up less of the screen. So that's it. That's how we're going to focus on being more selective, trading in higher ATR environments where it's more liquid. Focus on this hourly chart. What's happening here? Do we really want to trade? And sticking to our plan, of course, only trading with the 5-minute EMAs. What else? Oh, ideally the hourly EMAs and the 5-minute EMAs will be in sync. But say like these hourly EMAs are bearish, but these 5 EMAs are bullish. We can still go with the 5 EMAs, but need to be more careful, not target as higher R wins. And also, I need to get more out of my winners. I need to be a better swing trader. But the reality of the market is most of the time it's just kind of like meaningless chop, and then it makes its like bulk of its moves like rather quickly. Like today. In 2-hour period, it made pretty much all of its move and just ranged the rest of the day. Yesterday, all of its move from in 2 hours, the first 2 hours, then it just ranged the rest of the day, pretty much. You wouldn't want to go short down here even after the crossover because, well, we're in a bullish environment, and it's in the intraday range, right? It's in price action that's already happened. There's more likely to be a balance of buyers and sellers. It's less likely to have follow through. It is, fairly likely that it will retest the top, but look at the ATR. I guess the ATR was high over here, so we could have got long after it switched over. But right here, the expected value just isn't that great because it's hard to avoid times like this. But the reality is it pushed up, it's come down now, we had an aggressive counter move. It's probably just not going to go back up and touch here until like later. And it eventually did come back and touch here, but there's a lot of times that it could have tricked us to get in that would have failed. Like say you got long, I guess if you got long on bar, well, you couldn't get long on bar 44 because the EMAs, the 9 is below the 21. It's technically bearish. We can't get long here. could get long here. So you got long here, the stop loss at 51. It would just go nowhere for a while and come back. And I think that is why having like a time stop is a pretty good thing. Like saying, hey, I'm not going to trade. If the best trades, Lance Breitstein says, go your way right away. So if it doesn't go your way right away, it's probably one that, hey, maybe you can give up on. It depends, right? Because if it's at the start of the day and the ATR potential move hasn't been hit, then there's still a good chance that, hey, like it could go your way. Like today, if you would have go to the 5 minute, yeah, make it bigger. Say you like get in here and it goes against you, and then it pauses, and then it pauses. Yeah, it hasn't gone your way yet, but it's like it's still the start of the day. It can still make a pretty big move, and both of these pause bars are in your favor, so that makes sense to stay in. But let's go to like later in the day. Like over here, ATR's 4. It's pretty low. Getting long here is much less of a good idea because it's just chopped the last 3 bars. And it really didn't make a big push in your way. It just kind of stopped out and petered out and didn't do very much. So maybe you could have made 2 or 3 points, but really just not that worth it to mess around when the ATR is low, unless you're trading the 15-minute chart and you can be patient. And I need to be patient. I need to go for winners for longer, and that's what I'm going to do. So this was a good brainstorming video. I'm happy with it. Maybe I won't make the ATR quite this big because it is pretty ugly. Maybe I'll make it more like but I do want to focus on it, so maybe I'll leave it that big. I don't know. But thank you for watching. Thank you for joining this brainstorming video. Very curious to hear what you have to say about risk management, about being more selective. There's no way I should ever take 10 trades in a day again. That is just way too much. My decision quality, there's not going to be 10 quality setups in a single day. There might be 1 to 2 after hours, and then there might be, in the first hour or 2 of the day, when the time when it has the biggest moves, there might be, I don't know, like 2 good quality setups, maybe 3. So I need to trade less. I'm not going to put a max number of trades loss per day, or max number of trades limit per day, because if I say there is a day where I get 4 great setups and then a 5th comes along, I don't want to miss that 5th setup simply because I've already taken all my trades, even though that is pretty unlikely. I just want to make sure I can be more selective. So I'll filter through the ATR. I'll filter through the higher time frame candles, just making sure we're not in an inside bar, making sure the hourly candles are saying we're poised for a measured move. Most of the cleaner moves happen outside the prior day's range, so just focusing on that. Yeah, that'll do it. I'll end it here. I have to think more about this myself, but yeah, a lot of stuff to think about. And I have to be more selective. And I'm going to be more selective, but it's probably going to take time. But hopefully I can do it soon. Okay, thanks for watching. Peace.